Alright, boys. So it's a little late, a little held up at work. There's a reason I load my charts before every session. I'm turning my computer on, man. So yeah, I come home from work and I do this for you. Sometimes as well, I don't have the charts loaded up from doing an early shift or something along those lines. I mean, it's once they're up, they'll stay up for the rest of the time I have the computer on though. So I mean, it depends. You know, sometimes the charts get a bit clunky. It's best to reload them every couple hours anyway, just to make it clean. But yeah, no, I mean it's not a ritual. I'm just loading up my charts. So there was a little bit of risk on last night. There was a bit of surprise from the OPEC meeting. Now, most people thought they were just going to hint at an agreement and delay everything until the next formal meeting. We actually got the surprise that there was an agreement to cut production, and also Iran was not part of that agreement. You know, that they could raise production. That was like, wow. Okay, that's, you know, they've got themselves a nice deal there, and you know, the markets responded positively. Oil up 5%, 47.50. Risk appetite's been quite strong all day following. Mainly the dollar yen in the Asia session, rallying with the Japanese, and you know, we can see that risk appetite is not completely overflown into the start of the European session, but it's not too bad. You know, the market is holding its own, and there's some negative news out there in Europe, you know, regarding Deutsche Bank and a few issues. So I wouldn't be too surprised by this. In terms of what's today and tomorrow is, it's month-end flows coming through. It's supposed to be a little bit US dollar positive. I wouldn't read too much into that. There is some signs of pickup in inflation, according to the CPI bonds over in the US. That's interesting to note as well. Keep an eye on that. That would lead to US dollar strength, even in a risk-on environment. So there's another reason to be a little bit pro-US dollar, as opposed to ultimately, you know, negative US dollar. Making my buy Aussie plans a little bit more hesitant. I'm actually not going to go ahead and buy this dip right now. Usually I would be buying this sort of pair on the back of that sort of news, given relative strength there in stocks. But there's no rush. You know, we might get a nicer level, and also this is the second time I failed at 77. So I'm like, oh, okay, we might just wait there. If I did want to buy the Aussie, I might be buying it against the yen. So Aussie yen still got some potential there to move up. I think risk appetite's holding, so you know, that pair. Now dollar yen itself is got some major resistance, which is the long-term downward trend line coming up. Now this might hold until NFP next week, right? NFP next week comes in strong. We've got another bout of US dollar strength and potential, if that's the case, to put a bottom in dollar yen, and that may lead us to be trading in a higher range, you know, all the way up to 105 to 107 in coming months. And especially as we get closer to the December, the chances of more US dollar strength just coming through will help. If we get some specifics out of the Bank of Japan in terms of what exactly their next plan is and how far away that next plan is, that would help. We're not really getting much of that at the moment, and so it is you know, not helping when Kuroda speaks and doesn't give us a plan. So Kuroda spoke today and nothing really happened. He just basically reiterated what he said before. But the further we move away from 100, the more traders who are short may lose patience with this whole trade. And if we do by chance get some good US data and we break to the top side, then the whole game changes a little. And that whole scenario where we do get a break to the top side, and perhaps say this UK data comes in strong, would definitely look to be getting long the pound against something. Pound yen's the obvious choice, but pound itself against, say, the euro, or pound against maybe the Kiwi as well. Next month may be the main trade that I'll be looking at. But first we've got to get some nice data, and we need to get some sustained strength in the pound. The pound is just rolling over like a baby every rally. Really hard to keep buying dips here on this pair. Even though we had some short-term little bit of relief, it's still looking a little sickly. Now, this could be a little bit of Euro-Pound buying. Euro-Pound buying comes in a lot at the end of the month, and you know, we're definitely seeing that. I haven't really looked into the reports of Euro-Pound buying this month, but in any case, that'd be a little artificial. So, you know, we might be looking to sell some Euro-Pound a little bit later today, as that buying exhausts itself. When it's a little bit weird, like the sell-off right here, there's no real data to prompt it. There's no real reason, no negative outlook, no risk-off sentiment. To me, it just looks like month-end buying. So I'm just going to look to sell that Euro-Pound rally relatively shortly. Obviously, I'm biased because I'm short Euro-Pound already, and I want things to happen on that pair, but it's a particular trade I do. So the other pair which got a little bit of relief was the Kiwi. Once again, it got some relief from the risk-on OPEC decision, but it's already struggling. Okay, so it's, to me, this is extremely bearish given what's happened since the Fed. Okay, I think this is extremely bearish. So I'm happy to go ahead and buy some more Aussie Kiwi. Now, I don't know where the Kiwi and the Aussie majors are going, but I'm pretty sure that the Aussie Kiwi rally is going to continue. That the Kiwi's going to underperform. So I bought a little bit more, took some profit on the rally yesterday, and then I'm looking to buy more on the dip. And, you know, that would be basically just if the Aussie started to fall a bit more sharper and the Kiwi struggles to break that 72 support again. But eventually, right, the Kiwi breaking down is a bigger story than the Aussie breaking down. Aussie's already been down before, and the Kiwi hasn't, so the clean out in the Kiwi is overdue. And if the profit target's big enough, so 92 to begin with, 90 after, that's fine. In terms of stop, either above the highs or just above the previous reversal, that would look pretty bullish if we get back up there. So, you know, risk rewards there is not bad. The other trade that we have going is the Mexican. Yay. The Mexican trade got another boost last night because of oil. But just generally, as we go forward, if Trump doesn't start to get higher in the polls, then this trade should start to become a thing, and we get more extension to the downside. I'm hoping to get nice, big, fat red candles coming through here. Market really start to feel that the top's in, and that the tech traders do the rest on the way back down to, I mean, low 18s is easy. Below 18s requires probably Trump to lose the election, like the actual result, or just do something crazy. So either way, so you don't need to wait for the election for it to get down to the low 18s. You just need to wait for the election to get below 18. Yeah, look, I'm not going to trade it. That's just it makes sense to me, right? It just makes sense to me. If Aussie Kiwi is long and I don't mind selling dollar CAD, then I don't mind playing the cross. I don't trade it much. A lot of my brokers don't have it, so it's not the best pair. But similar to the dollar Mexican, I don't trade it much. I see an opportunity though, I'll get involved. Okay, I mean, it's the same game, just different numbers and a little bit more crazy, a little bit more volatile. Oh, dollar yen, you're breaking some hearts again. Perhaps that little rally's over, boys. We didn't, not enough oxygen up there. So this really could be the high of this little brief rally, and we may see not that retest of 102. You might see that being the that it for this little brief pop. I mean, stocks might be able to reverse that later in the US session. I was bearish on stocks last night, but then OPEC came out, so I have to be neutral now. But generally, there is some danger to stocks in the background there, so keep an eye on them going forward in the next little bit. Dollar yen. What are we gonna do with you? Pound yen must be getting back to that buy level. Oh. Are we gonna do it, boys? No, not yet. Not yet. I mean, it's very hard to buy pound yen if you're not buying dollar yen, or at least open to buying dollar yen. But bringing up the pound. Tell you what I'm going to do though, I'm going to sell a lot more euro pound. I'm going to buy a bit of pound Swiss and euro pound to clean away. So this time I'm going to sell a couple of lots, and I'm going to put my stop very tight. Now when I trade a little bit bigger, I do put my stops as tight as possible. Ooh. Making some. So literally 20-point stops, right? I want that. I don't want to be mucking around too long on this particular trade if I'm wrong. But if I am right about this being just some month-end flows and it rolls back down and the pound actually is getting some support, and then the data comes in really strong next week, a lot of ifs in this little tail, then potential this trade to be 100, 200, 300 points is real. So hopefully that does happen so we can watch that develop. I think he gets sick of me talking about euro pound while it's rallying. But yeah, no, it's a pair that I really like. It's made me so much money in the past. Like that's selling that we got from 2013 to 2015. I was just ultra bearish on this pair. And it paid off a lot, and then paid off in this rally, and then Brexit. I expect it to taper out and us to come back down slowly over time. ECB easing's dramatically more aggressive. ECB issues are dramatically worse than UK's. All right, these so many ways this falls. It's just, we need to get past the Brexit negotiations. So I don't mind taking losses, I don't mind holding losses, I don't mind being wrong on the exact timing of this trade, just as long as I keep that bias and I get paid off, the 1,000 pips at some point. Similar to the Aussie Kiwi, right? Don't mind being wrong a couple of times as we go towards parity, but as long as I get paid off on the big move back to 115, that's the main game on those two big trade ideas that I have. And they're the only two trade ideas I see where there's clean 1,000-point moves. Everything else is a little bit muddy. I don't know when Aussie's going to get back to 85. I don't know when Euro's going to get to 125. I don't know when Pound's getting to 140. Pound's probably getting to 140 much quicker than most of those other pairs. But the exact timing is still key, right? In this game to make money, not to be correct about predictions. Alright, let's have a look at a couple of those trade ideas that just came through in the last few hours. Forexsignals.com. Deal set up to fail. Are you talking about Euro Pound? Don't you start buying Euro Pound now, Potter. Pretty sure that's what Jenny does. She just waits for me to do a trade and goes the opposite. Alright, Jenny. Short the euro. Scalping. Yeah, okay. Don't mind this trade. There's been a lot of talk ZAR's going to get weaker going forward. Ooh, Kiwi long. Oh, that's dangerous, mate. New Zealand dollar short. You're going to get a lovely little tick. Well done, class. He did not believe the rally there for Ghazi. Let's have a little look at some data just to finish up tonight. A little bit late. Not much happening in the markets. A little risk off. That's about it. So once again, this is coming from the FXWW room. You can get subscription to this for $70 a month. I highly recommend you do. And you can also get access to FX Connect, the Reuters Forex platform Lite, where you get access to news and streaming updated economic news, but it's not as powerful as the main Reuters machine. Jesus. He's talking about property prices in China. Z-Way found property prices have already risen 23% year on year in these cities. Soaring land auction premiums revealed a very high expectation of further price inflation. So this is, I mean, bubbles are basically when people believe it's just going to keep getting more and more and more, and there's like this frenzy to buy a limited supply of things, and people make money off flipping houses and keeping on flipping houses. Then you keep on doing it, right? But then it ends in disaster, and then there's never been a case where it doesn't end in disaster. There's no bubble which is not being popped, especially bubbles the size of China's bubbles. So it's not a matter of if, it's a matter of when, in my opinion. And while it may be a different sort of bubble popping than usual, it will happen. Probably, be a case study in 2018. You'd be looking at it in 2018 going, oh, the great China crash. It's not happening now, but when it does happen, it's pretty hard to stop. And Yellen, we didn't hear much about Yellen in the early market reports today, so I doubt she said anything crazy. Yeah, doesn't see any upward pressure on inflation yet. Although we don't talk about inflation much, we talk about employment. Inflation is really important for the globe. Once we start to see inflation, the Forex game that we have currently is going to change dramatically. So you guys got to get really ready for this. This is, at some point, inflation's coming back. I know that it's been a while since it has been here, but at some point it's coming back. You can't have easy monetary policy and not have inflation at some point. We can't have aggressive easing monetary policy like they've got around the world. Oh yeah, the deal is set up to fail in OPEC. Prado, you're right, mate. Alright, so once again, guys, we're not watching data tonight. We're watching risk on, risk off in the markets. If the Fed and OPEC reaching a meeting cannot hold a rally, there's something seriously sick in this market. So keep that in the back of your mind. You know, we shouldn't even be talking about potential downside given those two events. We should be talking about sustained rallies and new highs. This market reaction is not that bullish. This is actually quite bearish. And the US dollar reversals in the Aussie and in the Kiwi are telling you, and probably dollar CAD, are telling you that this is not a clean trade to be long risk. So I'm prepared to sell stocks. I'm prepared to buy the US dollar, and dollar yen failing again is also not a great sign. So yeah, my plans to buy pound yen on the dip have been sidelined for the time being. We may wait for a little bit lower levels. Alright guys, have a good night. Have a good night. I'll be back tomorrow 9 GMT. Friday, thank God it is Friday. This week has been pretty boring for the markets. Next week's going to be stellar though. Next week it's really hyped up. Not just because the RBA and its impact on the Aussie Kiwi trade of mine, but we also get a lot of UK data that's really important for the UK recovery trade and the short Euro pound trade, and then we get the NFP, which is really important for risk on, risk off, and the December rate hike or not. Trade safe, boys.